In today's interest rate markets, let's take a look at the 10-year note futures as they're experiencing some selling pressure for a second day. We are now seeing them down 10 out of the last 12 trading sessions and trading at the lowest level for the June future now. We're looking at 122.22 in the June future. That's just off the lows of the session. And we did put in new intraday lows for the June contract today as the markets continue to realize selling pressure here for a second consecutive week. I think when you look at some of the driving factors today, a lot has to do with the continuation of the Fed narrative surrounding the hawkish tone, I guess, as far as the potential for increasing the rate hikes and the potential increase of, instead of 25 basis points in May, to 50 basis points in May. That's being floated now. Basically, it appears to be that's what the Fed chairman was talking about yesterday. Other Fed governors are talking about it today. And that dynamic continues to shape the interest rate market, the treasury markets, and I think that's why we're seeing further selling pressure in the 10-year note futures today as the market's adjusting for the potential for more active and sooner rather than later increases in treasury markets. And when you look at the yields today, we're looking at a 10-year yield now up 6 basis points to 238 basis points today. That's the highest yield for the 10-year note going back to May of 2019. So we continue to push up to levels, the pre-pandemic levels that the market had experienced in 2019. And the yield curve today is shifting higher across the board. We're looking at from the 1-year all the way out to the 30-year with a little bit of adjustments within the middle of the curve, but overall we're looking at the 1-year through the 30-year up about 6 basis points across the curve today. So adjustment higher, selling pressure across basically all the durations in the treasury markets and pushing those yields higher once again today.